Hi everybody, it's Rowan Smith from the Mortgage Center. It's been a while since my last post, and I wanted to provide an update on a couple of things that I get constant questions about in our marketplace. Back in April, when the changes that the government handed down took effect, it got rid of what most people thought would be all of the 35 and 40-year amortizations. So the question is a 35 or 40-year amortization still available? The short answer, yes. Now the longer answer is a little more complicated. For example, who is it that offers that? Well, if you're dealing with TD Canada Trust or Scotiabank or one of the large chartered banks, they're not going to be able to offer you an amortization of 35 or 40 years. There are a couple of credit unions that will do it, and there's a lot of non-banks, and I'm referring to broker channel lenders, that will also do a 35 or even a 40-year amortization. So what's the criteria? Well, first, you need 20% down. The reason for this is a bank, once they put 20% down, cuts CMHC or mortgage insurer out of the equation for the most part. In that circumstance, they can take on as much risk as they want, or they can offer whatever product they want because the government isn't involved in that transaction any longer. So, if you want to get a 40-year amortization or a 35-year amortization, you can do so if you have 20% down. Now, why would you do that? You could be in your 50s thinking, well, I'm not going to live until I'm 90 years old. It's not about that. It's about cash flow. And many times people that opt to take a 35 or 40-year mortgage are doing so on an investment property, where they want to have a property that's positively cash flow each month, or perhaps it's because there's a situation in their life where they need to minimize the minimum out of pocket each month. So if you or somebody you know needs a 35 or 40-year amortization, I can help them. Please send them my way. It's Rowan Smith from the Mortgage Center.